All right. Hey, everyone. Welcome to BizTalk, presented by the South Windsor Chamber of Commerce. Today's episode is sponsored by Crystal Financial Insurance Services, providing insurance and educational services to individuals, families, and businesses across Connecticut. To learn more, check out www.crystalfinancialinsurance.com. Hosting today's episode from the South Windsor Chamber of Commerce, I'm Vasanth Kainkaryam with James Babcock. Today's guest is Dan Rosow. Welcome, Dan.
Hey, thank you. Good morning.
Awesome. Great. So let's get started, Dan. So tell us more about yourself, your company. What do you do?
Sure. Live here in South Windsor, Connecticut. Been here about 5-6 years. We are a commercial real estate advisory, brokerage, management, consulting type company. I'd say we're kind of a boutique, small company, 4 to 5 people. We've transacted certainly a lot of real estate transactions in probably over a dozen states. Been doing this for 25 to 30 years. And we take a very different approach from the standpoint that we also have our own portfolio of real estate, and we get involved in transactions that tend to be complex with partnership issues, vacancy issues, deferred maintenance, environmental issues. And we rework those properties into successful, occupied, stabilized real estate projects. So we, our focus really is probably more central Connecticut, Massachusetts. We've got some stuff in New Hampshire, but geographically, a couple hours of, let's say, the Hartford area.
Oh, that's great. So during, COVID, many landlords and tenants are struggling with, it sounds like rent, volume, productivity, and from, few contacts I know that leaving a lease can be hard. What strategies have you employed or?
Yeah, it's a great question. And it varies. Different sectors of the commercial real estate world have been impacted very differently during COVID. And as many people realize, the malls and the shopping centers, might be suffering in certain ways. The hotel industry is suffering in different ways. Landlords for apartment buildings have realized that, hey, a lot of tenants have just opted to maybe stop paying rent. They got stuck with situations where the court systems have been closed. They don't have many avenues to, resolve those issues. Much of what we also work in is the industrial sector, which is more distribution, manufacturing, warehousing, storage. That industry has probably been far less impacted by COVID, and in some cases, is very strong right now because of demand. In some cases because of COVID-related things. More storage, more distribution, more online shopping. The Amazon, type businesses of the world need that space. And then certainly the office market is the last one. So each of those have been impacted very differently. And we've worked from both standpoints, both the landlord side, where we want to keep our tenants in business. We don't want to lose them. At that point, we have vacancy and we have to re-tenant them, potentially in an environment that is more difficult to re-tenant space. And then there's always cost involved in doing that. When somebody moves out, you're frequently replacing walls and carpet and repainting and all kinds of different things. So turnover is a cost that sometimes you want to avoid in real estate. And that's true probably across the board with all those categories. We've been instrumental in helping some of our clients with the right strategy to go back to their landlord to ask for some relief when or where it's needed. And there is a good strategy to do it. There's a wrong way to do it. There's a right way to do it. And us as landlords, have seen how we've been approached or have been able to navigate through some of the good approaches on getting the resolution or the answers that you want.
Could you share maybe a couple of those approaches that have worked?
Yeah, sure. For example, the banking industry has been given good latitude by their regulators federally to be able to modify commercial loans with very little negative impact to them as a lender, which historically those modifications caused other problems for the banks if they modified your loan terms. So the feds realized what was happening here, and they did not want mass defaults. The banks didn't want mass defaults. So the banks had a lot of latitude to very quickly allow commercial borrowers to defer payments. And in most cases, it was very easy to get 60 or 90 days of no payments. That amount would be, in some cases, deferred to the end of the loan, which is beneficial to the landlord. It's not that you don't owe the money, but you're not going to have to come up with 90 days worth of payments in 90 days, because that may not really be a big help. It just, it kicks the problem a couple months down the road. So where the landlords have been able to get relief from their banks, and in many cases that's across the board, it's enabled them to have a little more latitude to help their tenants as well, because their mortgage payment may have gone away, for a short period of time. So that was a very big help across our industry. There's lots of tenants that we had approached, and they said, we're doing fine. We'd rather stay current. We'll let you know if we run into trouble. In other cases, we have given relief to tenants where maybe it's a portion of your rent for X number of rents, or maybe it's a deferral of your rent for a couple of months, or in some cases, it could be an abatement. We have a national tenant that plays hardball with this kind of thing when the opportunity arises. We ended up giving them, let's say, an abatement, which is sort of free rent for 2 months, which they had not paid. So we would have had to fight to kind of resolve it. But we did it in exchange for adding a couple of years onto their lease term. So in our particular circumstance, having 7.5 years on the lease versus 5.5 years makes a difference, because when we look to refinance or possibly sell the building, that extra 2 years has a lot of value to us. The dollars that we gave up in 2 months rent made it a very easy resolution. The tenant sort of got what they wanted. We got what we wanted. It didn't cost the tenant really anything to add some term onto their lease, but cash in their pocket today. And if they're able to do that, they've got thousands of stores. It really adds up to them in a time where their business is being impacted.
What about, because you mentioned, we're talking a couple of months, we're talking about adding terms, as we sort of go into this, what many people are calling the second wave of COVID, right? And as we sort of see the cases rising, some states where they've actually gone back into earlier phases where they've shut down, do you think that the same strategies are going to hold, or do you think that businesses are going to have to come up with new strategies if their businesses continue to get impacted over the next year?
Well, it's another great question. I think that, some of the former strategies are still going to hold. And I think that, there's going to have to be some new plan of attack. Maybe there's a little more certainty with this wave, that there is an end in sight, or there's a plan because there's a vaccine that's now rolling out, assuming it does what it's supposed to do. People aren't completely in the dark on will or when will things come back to normal. We do have some tenants that are impacted because they're in the athletic type uses. And so they've been affected on their sort of class sizes or group sizes and individual or personalized training. And in those cases, they've figured out how to adapt. And sometimes it means, more classes and smaller groups and longer hours. But the name of the game in many cases today is to keep your lights on, is to stay in business. This may not be your most profitable quarter or year, but if you don't figure out how to survive, you won't be here next year or the year after. Like any business, there's blips and there's peaks, and you're not always going to be doing great, but you got to be able to weather the storm, and that's what this is. So some of those strategies are still in play, but it's a fluid, changing situation.
And so, as for the, one of the businesses, do you lease space? Do you buy space? And I think we've had some brief conversations about this, so to our viewers and listeners here, right, for those businesses that are, leasing space that are like, hey, you know what, maybe we should just buy it, or perhaps new businesses that are thinking about space in general, what advice do you have on leasing versus buying? Do you have thoughts?
Yeah, so there's clearly more flexibility in being in a lease, and there's value to that. People say, oh, you're throwing money away and you're doing this. Well, there's benefits to owning and there's benefits to leasing. Lots of times companies and businesses do not want to tie up their capital in owning real estate because it's a better use of their money to be using it in growing their business. Now, there's a lot of flexibility in leasing. You can move when your lease is up. You can sometimes have rights in your lease that allow you to terminate early. And sometimes those rights can be tied towards performance of your business, whether it's, gross sales. So there's a lot of ways to negotiate things into a lease that give you a lot of flexibility. And sometimes there's a penalty to terminate early, but that penalty could be far worth it to have to allow you that flexibility of moving, whether it's to another geography or to a bigger building. So you don't know if that space is going to be adequate in 18 months or 3 years. So that's great flexibility. In this environment, if you're in a lease and you're thinking of buying, some of the opportunities that may be out there may not exist yet. So there may be far better opportunities in 3 months, 6 months, 9 months on the purchase side, because the lenders are anticipating still a lot of defaults. I think we're trying to, as an industry, or lots of industries, minimize that, but it's, there's going to be a higher level of default to some of these lenders in this COVID environment, and that will lead to a lot of opportunities, whether it's for investment firms buying things or buying mortgages or notes that are in default, or if you're a business that thinks, hey, maybe now is a good time for us to buy a building and move our business in it, which long-term I think is a great strategy. If your business can be paying the equivalent of what's a mortgage instead of a rent, then you as the owner or a partnership down the road owns this property that really is pretty easy to own. And we've done this with other clients where we've helped them get into buildings. And if it's a building that's bigger than they need, we can handle or lease the rest of the space for them, or, manage it, or they can hire someone, or they can do it themselves. Sometimes it's easier for them not to be dealing directly with tenants next door to them or be bothered with that stuff. But it also gives them latitude to grow their business. If there's other space in the building beyond what they occupy, it's a great, financial vehicle. And so leasing today provides a lot of flexibility. We've helped other tenants go back to their landlord when their leases are coming up for renewal and just do a shorter term extension. Maybe they have an option for 5 years, but they don't want to commit to 5 years. In this environment, it's much easier to approach your landlord and say, look, we don't know what's going on. We don't know, what's happening with our business. We don't want to leave today, but I don't want to sign a 5-year lease. Let's sign a 12-month lease or a 6-month lease, and let's evaluate it in 180 days and see where we're at. So there is an opportunity for businesses to have flexibility to go back to their landlord and maybe do something than what the document says.
And so speaking of lease, one of the things I find personally very fascinating is, prior to COVID, we saw a lot of, shared working space, right? Sort of commercial, shared business space. Do you see that coming back, or do you see that changing, right? You mentioned there's a lot of these, buildings that have big businesses and, lots of physical space, but then you have a lot of, businesses that are like, what, I don't necessarily want to commit to such a large space. Can I share that space with other businesses? Do you see that model, continuing to grow, or do you think that's going to change?
I think that model is most applicable to the office environment, and maybe it's medical office and office. It doesn't lend itself as easily to a retail business or an apartment, unless you have roommates, of course, or the industrial sector. But the office environment is a little bit easier to have a shared, space, basically. So I think that the big office users, and it probably transitions to the smaller ones, are realizing after COVID and even before COVID, do we need all this space? And do we need our people sitting in their desk every day and leasing all this space in the 8th floor, the 12th floor of this building downtown? I know that a lot of these companies are looking at significantly reducing their real estate footprint over the near future. We're partners in a project out of state that we have a large insurance company as a tenant. They've downsized over the last 15 years a couple of times. We just sold the property last week because we have a pretty good feeling that come the end of their lease in 2 years, with what they've figured out and learned from COVID, because they were forced to operate this way, their footprint is likely getting smaller or completely going away than getting bigger. And we'd rather not own the building when it's empty in that market. And so I think that the shared environment is going to continue to have some relevance because a lot of these remote office protocols are going to still need some office presence. I don't know if that's going to look like it's X number of days a week that certain employees are supposed to go to the office, or they're going to have more satellite type locations with shared conference room, smaller footprint. And so I think in the office world, that probably is still something that will be viable. But I think that the office real estate world is going to look very different, in the coming couple of years. And keep in mind that several of these tenants, some of them might be large tenants, their lease may not be up for 2 or 3 years. And even though they're not occupying the space, they're still paying for it. So the landlords are probably getting paid. And the lease renewal may not happen today, but it might be in 2 years. And when that lease renewal happens, it's very likely to be for far less space or at a far reduced cost.
So, I know that, it sounds like your commercial, property management is just a smaller part of your business as a whole, but, what techniques and new type of communications have you had to, implement with your clients and stuff throughout COVID? I mean, has it been, you've been just, are you in lockstep with them, all the time, communicating all the time? I mean, it must be a lot of work for you.
Yeah, again, that's a fluid situation as well. Most of what we manage are buildings that we have a ownership stake in. We used to always joke that property management is the hangover after the party, because you're awfully excited when you're trying to buy something and you're going through the whole process, and it's an awful lot of work to get all the pieces together. And then that day comes when you close, you're real excited, and the next day you're like, well, now we got to run this thing. And the tenant phone calls happen and the things that are broken or that you're trying to get up to speed. So property management, we do some third-party management, which is for properties that we do not have any ownership of, and we do that on a select basis. The COVID world is evolving. Certainly, posting signs or making sure tenants have signs where their masks have to be. I think most businesses realize, hey, we want sanitizer out by our front door, and gloves, or marking the floor with distancing, and some of the things that you're seeing everywhere you go today. When this first hit, people were wondering, should they even walk into a store, or trying to avoid the supermarket. Today, I think everybody's walking into these places and they're shopping and they're doing things, and it's a little bit of a different world than it was. And, they're sanitizing their hands and they're wearing masks and they're trying not to touch things, and they're distancing themselves, and, all those things that everybody has picked up on pretty quickly. And I think with the property management, it's pretty similar. You're just trying to keep up with, what those protocols should be.
And so one of the pieces I wanted to chat with you briefly about was, your company brought a large business to South Windsor, creating employment. And so as a chamber, it's very exciting to hear that. So if you had to just give 1 or 2 minutes of how can companies continue to stimulate growth in our town, like you did, do you have any advice on that?
Sure. So many times the transactions that we do are because we're trying to fill vacant space in a building that we have. And on the sales side, we're trying to sell something. And the internet has helped with making it very easy for people to search for things that they want, no matter where they are. They could be sitting at their desk in Missouri or overseas. And if they're looking for something to buy, they can search with certain parameters on a region, a size, a product type, a certain return, or a certain upside, and zero in this focus. And some of those are true with attracting new businesses or leasing space. So we try to market the spaces that we have through a bunch of different channels, which have a broad, great reach from people looking for real estate. So in that regard, you mentioned a project we did, which was bringing a company out of New Hampshire called NB Tractor. They are the fourth or fifth largest Kubota dealer in the country, and they had an opportunity to expand into Connecticut. And we originally came in contact with them because they inquired on space that we had available. And then that transitioned to them ultimately moving to a different building, and them asking us to buy it and build it out and lease it for them, or lease it to them, and just handle that. They didn't want to own it down here. It's a little further from their base of operations. And so, sometimes it plays itself out in a way. And we said, look, we'll help you with however you want this transaction to go. You let us know. So in some cases too, there are trade shows for different industries. So we've spent a lot of time working in the shopping center industry over the last 20 years. There is a shopping center council called International Council of Shopping Centers, and they host some pretty big trade shows. We usually historically have gone to Las Vegas, New York, Boston, and either Hartford or Rhode Island. And all of your retailers, for example, that are transacting in that region will have representation at that show. And so in some cases, municipalities or towns also attend those shows because they're trying to see, okay, who is not in our town that we could talk to that maybe should be in our town, or who do we want to try to attract? So in the retail industry, there's trade organizations that really handle the best way to market some of those things. And a lot of it as well can be cold calling, old-fashioned cold calling of, getting on the phone and calling up, 10 businesses a day that maybe are not in your market and asking, do you have any considerations for expanding into Connecticut? Or who would I talk to about a new bank branch location? That type of thing. And you do spend a lot of time doing that.
Neat. So there is a place to just randomly pick up the phone and talk to a stranger rather than just sending LinkedIn messages or whatever.
Yeah, I mean, my generation still does it, but I don't know that the younger generation has that skill set yet. But we'll see.
Awesome. Great. So this has been fascinating, Dan. So tell us, if you had to give our listeners and viewers 30 seconds worth of wisdom from today's conversation, what would those highlights be?
Sure. I think communication is key. So if you're in a lease situation or you're a landlord and you have tenants, I think communicating and knowing how they're doing is important, because in many cases they may not need help today, but they may in the future, or they didn't need it 4 months ago, but they need help today. I think being in a lease offers certain flexibility, and just because your lease might say certain things in it doesn't mean you can't approach your landlord and ask for something different. So it's a great industry. It's still a great industry. There's opportunities all the time in this industry. And I think that the comforting thing, if there is one in this COVID world, is that anybody that is having some distress or difficulty, they're not alone. I mean, the thing here is, hey, you didn't make some bad business decisions and, nobody is going to reach out to help you, or you didn't make a bad purchase on your real estate. Most tenants, most landlords, most people are in a very similar boat, some worse than others, because like we said, these different sectors of the industry are affected differently, but everybody's in this situation. And there is relief. The feds have done certain things. The banking industry has done certain things. These relief packages, I think there's another one coming out. We don't know what that looks like, but I think those things are important to evaluate, even historically, where people maybe don't want to take on debt or don't want to borrow money. It might be the right time to rethink some of those strategies with some of these very attractive EIDL loans and ways that the feds or the SBA has come up to try to help keep businesses in business.
Awesome. Great. Well, thank you so much for joining us. This was very informative.
I appreciate it.
Awesome.
And we'll talk again soon, I hope.
Great. And to our viewers and listeners, thank you for joining today's episode of BizTalk. Once again, sponsored by Crystal Financial Insurance Services and hosted by the South Windsor Chamber of Commerce. Have a great day. And once again, to make an appointment with Crystal Financial, you can call the office at 860-436-9522 or check out their website at www.crystalfinancialinsurance.com. Have a good day, everyone.